Good afternoon, this is Sean Golding with Golding & Golding, here to discuss the basics of cryptocurrency tax amnesty. Cryptocurrency, all the rage these days, right? You got the IRS including it on the front page of the 1040 tax return. You've got these different organizations they've joined. They joined up with other countries for J5. They created an enforcement group, the Operation Hidden Treasure. People have been getting soft letters, 6173s and 6174s, so it's becoming a much bigger deal. Two of the biggest concerns when it comes to cryptocurrency is it taxable and is it reportable? Right, the rules are still in flux. And so let's go through the basics to get an understanding of where you might be in terms of if you're compliant or not, and then what you may do in order to get into compliance. So is it reportable, right? If it's US based, then generally on the 1040 page 1 you identify if you acquired, sold, or other crypto transactions. Limited for 2020, the IRS limited what needs to be reported, but most of the time it's still reportable. If it's foreign or overseas, it's a lot different, right? The IRS is not sure, and FinCEN is not sure yet whether they're going to require it. It seems like they are. Recently, a notice came out, Notice 2020-2, which is from FinCEN, basically saying our intent is to require individuals and other U.S. persons who have cryptocurrency overseas to report it on the FBAR, similar to how they would report currency. There's also Form 8938, which is used as the Foreign Account Tax Compliance Act. It's used to report specified foreign financial assets. Presumably, they're going to require it on the 8938 too. It's going to be a pretty tough sell to say that cryptocurrency is not a foreign financial asset. I mean, there's an argument, gold that's not held in an account somewhere. So if you have the cryptocurrency on your personal wallet, maybe not. If you've got it in a foreign financial institution or on an exchange, then maybe so. Another concern is, if you've been hearing in the news, is that they're starting to create things like ETFs and mutual funds for cryptocurrency, which could then, if it's offshore outside of the U.S., it might kind of delve into PFIC, Passive Foreign Investment Company, reporting on Form 8621. If it's tax, it's a little different, right? Just buying cryptocurrency in and of itself is not a taxable event. If it's exchanged or sold, it generally is a taxable event. Even though people use it like it's currency, from an IRS standpoint, it's not treated as currency. It's treated as property. When you exchange property, depending on boot and other issues, you have a base, right? Your basis may be different than the basis of the other person, and the fair market values is going to be different, so you may have a gain or a loss. In addition, if there's income generated from the cryptocurrency, then that's going to be taxable generally as well. Whether it's capital gain, you received it as a form of employment, it's in a fund and you're receiving dividends or capital gains, it's all taxable. So when it comes to enforcement, the IRS has really amped up enforcement, right? Like I mentioned before, J5, Operation Hidden Treasure, a lot of soft letters are going out. There may be FBAR and FATCA requirements, and it could lead to significant fines and penalties. So what do you do about that, right? So there's no actual cryptocurrency amnesty program just yet, right? The IRS basically said they're not going to create a standalone cryptocurrency program. Whether that's going to stick or not, who knows, right? But that's the position they've taken thus far, not going to be a standalone program. So then what are your options? So generally, you'd have the same options that anyone has if they're going to do an amnesty disclosure. You've got voluntary disclosure, VDP, is used for both domestic and offshore. It's for people who are willful or otherwise cannot certify under penalty of perjury that they're non-willful. You've got the streamlined filing compliance procedures, which is broken down further into the streamlined domestic offshore procedures, streamlined foreign offshore procedures. Then you have things like reasonable cause and delinquency procedures. Each of the programs have their pros and cons, right? If you're willful, then presumably you would do voluntary disclosure. You can't do any of the other programs. If you do and you get caught, it could be a big issue, like Mr. Rahman in Virginia, who was recently indicted. Another person was indicted about a year ago. I believe it was in the Booker case. If you're willful and you try to do streamlined, it's not worth it. Don't let any doofy practitioner kind of goad you into that. When you're non-willful, you have a lot more options. You've got streamlined domestic, like I was saying, you pay a 5% penalty on that. Streamlined foreign, there's no penalty, which is great. Some people may not want to pay the penalty. They may take their chances with something called delinquency or reasonable cause. They recently modified delinquency, so it's not as beneficial as it used to be maybe 6 months ago, but it's still a good program. We have lots of information available on our websites. You can always reach out and schedule a reduced fee initial consultation if you think it's appropriate. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.